Live from London, you're watching Bloomberg Daybreak Europe. I'm Lizzie Burden, and these are your top stories. An ally at the strongest level. President Trump praises Japan's new prime minister and her plans to increase defence spending. We'll be live in Tokyo. Plus, the record-breaking rally takes a breather as stocks slide in Asia. Copper flirts with new highs on cooling trade tensions between Washington and Beijing. Plus, banks in focus as HSBC shares gain in Hong Kong on an improved outlook for profits. BNP Paribas earnings crossing the terminal, and we'll bring you those numbers in just a moment. Well, we begin the show with breaking earnings from French bank BNP Paribas out of Paris. Trading performance very much in focus given just how solidly its US peers have been reporting. And third quarter net income comes in pretty much in line with estimates. An ever so slight miss here, 3.04 billion euros compared to an estimate of 3.07 billion euros. And CET1 ratio also pretty much in line. 12.5% is the final number. The estimate was for 12.4% here. And we're going to be speaking to the CFO of BNP Paribas after these earnings this morning. That interview coming up at 7:10 a.m. UK time on the opening trade. Really interested to hear what he has to say about the recent US court ruling linking BNP to human rights abuses in Sudan. And we should say, of course, that BNP expects that to be overturned on appeal. They say that the recent jury verdict is fundamentally flawed. So looking forward to hearing what Lars has to say about that. But next, we turn to Swiss pharma results dropping as well from Novartis. Of course, pharma very much in the crosshairs of President Trump's tariff storm. But specifically for Novartis, the genericization of its Entresto drug, a key theme for the third quarter. And core EPS in this quarter comes in pretty much in line with estimates. $2.25. The estimate was for $2.26. They're reaffirming their full year 2025 guidance, and they say that they've delivered solid sales in terms of core operating income. So those results coming in, of course, on Sunday they said they'd buy the biotech company Avidity in a $12 billion deal. So we're going to look forward to more detail on that when we speak to the CEO, Vas Narasimhan, on the opening trade as well later on this morning. So that conversation coming at 7:45 London time. But look, checking in on these broader markets, we of course ended yesterday with stocks at all-time highs on the hopes of a US-China trade deal on Thursday. And we begin Tuesday with traders kind of holding their breath for more detail. We're waiting as well for two massive days of earnings, particularly on the S&P 500. So futures in a tight range this morning, and stocks lower already about 0.4% in the Asia session. Now, if we go over to the cross-asset picture, you can see gold has dropped below $4,000 a troy ounce as the trade progress sapped that haven demand. We're still below that level now, and I wonder if this could be a moment for a little central bank dip buying to raise the price up again. But Dr. Copper on the flip side, a bellwether for global growth, of course, that's been flirting with a record high itself, again on the cooling trade tensions, again just shy of that level now. Oil steady but pointing lower, on track for its third month of losses. Traders back to focusing on the supply glut, and you've got the 10-year US Treasury yield lower than 4% again here. 3.97 is where we trade as we await to see how dovish the Fed is tomorrow. But let's see how Asian markets are faring now. Winnie Chu is waiting for us in Hong Kong, and Winnie, it seems that where you are, stocks are also slipping back from yesterday's record highs.
Yeah, exactly, Lizzie. We're seeing that Asian stocks taking a breather here after having hit so many recent record highs in the past few sessions. And we are seeing that the MSCI Asia gauge down 0.4%. But leading the losses here are the Korean stocks. You see Kospi down about 1%. And that's being dragged by losses in SK Hynix here, where we're hearing from analysts that its rival Samsung is cutting prices for the HBM chips prices. and just overall a bit of a weak sentiment as we head into the meeting between Trump and Xi on Thursday. And also, again, all eyes are on earnings and on the central bank decisions, as we're expecting the BOJ decision to also start from tomorrow. Now, we look at what's going on. Chinese markets also flipping into the red in the afternoon. Actually, it was fluctuating slightly more earlier in the session. And here I wanted to highlight, we have the Shanghai comp here down a bit right now, but just earlier today, we crossed that 4,000 level, the first time in a decade. So that key psychological level is what local investors are watching, and they say that that really boosted the overall optimism in Chinese stocks. But we see a little bit of a pullback today. However, here for the onshore yuan, also strengthening to a one-year strength on the back of the overall weakness in the dollar. And that weakness in the dollar is also translating into other currencies when you flip the board and look at what's going on in the Japanese market, because we are seeing a little bit of further strength in the Japanese yen as well, up strengthening 0.7%. So on the back of a weaker dollar, and also a minister saying that he's closely watching the impact of the weak yen on the economy. Now, all eyes really are on Japan, because we have Trump meeting Takaichi right now, and earlier today they've signed that agreement and also saying that they're going to form a stronger alliance. But we're seeing that in the stocks, it's not really translating into those optimism in the stock market. Pacing back a little bit, as we are hearing from traders that it's a bit of a profit take after the Nikkei hit that 50,000 mark yesterday. So still watching the key developments between the two leaders in the country.
All right, nice one, Winnie Chu. Thank you so much out of Hong Kong with the latest on Asian markets. And I'm glad you ended there for us in Japan, because I want to dive into the geopolitics now. President Trump reaffirming that the US alliance with Japan is a strong one. He calls the nation a strong ally after his first meeting with the first ever female Prime Minister of Japan, Sanae Takaichi.
This will be a relationship that will be stronger than ever before, and I look forward to working with you. And on behalf of our country, I want to just let you know, anytime you have any question, any doubt, anything you want, any favors you need, anything I can do to help Japan, we will be there. We are an ally at the strongest level.
Now, he also praised Takaichi's defence spending plans as the two leaders signed a framework deal on critical minerals and rare earths. Well, for the detail, let's bring in Bloomberg's chief North Asia correspondent, Stephen Engel, out of Tokyo. And Stephen, it sounds great, the vibes sound good, but the detail seems a bit light here, specifically on trade.
Yeah, that's right. Look, they wanted to send a unified front, right? The U.S. team just came from that framework agreement in Malaysia with the Chinese. They're now heading on to Korea tomorrow, and they're going to be meeting with Xi Jinping. So a sandwich between that was a chance to solidify the alliance here in Japan. It could have gone worse. I mean, really, you could have seen Trump and Scott Bessent attack Japanese for its weak yen and its trade policies. Howard Lutnick and Trump could have warned the Japanese, don't try to renegotiate the trade deal that settled on 15% trade tariffs on Japan and that $550 billion investment fund to the United States. You could have seen Marco Rubio and Trump say, look, you're not spending enough on defense, but it was none of that. It was all glowing. Both sides across the table saying flattery to each other and, having warm reminiscence of the slain former Prime Minister Shinzo Abe and essentially Takaichi taking on the mantle of Sananomics, as Bessent calls it, and also with defense spending at the front of some of the discussions, and they were seemingly in agreement. All the while, of course, the backdrop to all of this is the threat that China poses to the United States and the global world order and Japan's role in that. It could not have gone probably better for the Japanese, since the U.S. administration and Trump did not nitpick on the details, especially on something like the weak yen.
Yeah, and the criticism of the Bank of Japan that we've previously heard from Scott Bessent, notably absent, Stephen. But you talk about foreign policy. We know that Takaichi is a foreign policy hawk. How much has that endeared her to President Trump compared to her predecessors?
I think quite a bit, because, again, after Shinzo Abe, you had Kishida and then you had Ishiba through the Biden administration and in the beginning part of this Trump 2.0. They didn't quite have the same kind of rapport. Trump had a very strong rapport with Shinzo Abe and now seems to be trying to build a similar kind of rapport with Takaichi-san, who is known to be more nationalistic. She wants to build up at a much quicker pace the defense budget, despite the fact that that's a very sensitive subject in Japan. But Trump wants Japan and the allies in this part of the world, including South Korea, where he heads tomorrow morning, to pick up bigger part of the defense bill, and Takaichi is going to push that forward. Not surprisingly, I might add, Lizzie, the two of those leaders right now are on their way or already there in Yokosuka, just south of Tokyo, at the U.S. military base, the harbor there, aboard the USS George Washington, so to sort of solidify their agreement on the need to have a unified defense here in Japan against the threats, if you will, if you want to call them that, from China, as well as another very tangible threat, and that is North Korea.
Well, we'll keep an eye on that, and we'll get you back on, Stephen Engel. Thank you so much for that crucial context. Our Chief North Asia correspondent, Stephen Engel, there, and we'll get him back later in the programme. But there is the Japanese meeting. We're also on tenterhooks for the Trump-Xi meeting, as well as a raft of earnings and the Fed. Let's get back to the markets and bring in Bloomberg's Valerie Teitel now. Val, is the optimism that we saw yesterday going to continue this week?
Well, look, we have a long time to wait until Wednesday, the Fed decision later in the afternoon, and then those tech earnings after the bell. So nearly 2 full sessions for the market to be in limbo. It does feel like we could be pretty risk on in those 2 days, absent any, upsetting news on that Trump-Xi meeting coming on Thursday. But we did have not just one, but all 4 of the U.S. major indices closing at record highs yesterday. The S&P 500, the NASDAQ 100, the small cap Russell 2000, and the blue chip Dow Jones all notching fresh record highs in the session yesterday on the back of this optimism of what Bessent and the progress they made with China on those trade negotiations over the weekend. The attention, I guess, in the lack of data and the lack of risk events this week could very much be in D.C. We know that the CEO of NVIDIA, Jensen Huang, is going to be making a keynote speech in D.C. later today around 4 p.m. London time. They are hosting a tech conference there in D.C., and this could be very topical if he does want to make some comments when it comes to the U.S.-China chip policy. He's been a big proponent, Lizzie, of allowing U.S. companies access into the Chinese market. He thinks doing otherwise would really limit the U.S.'s AI global dominance. He's used these in the past to also launch new products, talk about his AI vision, and the market is on tetherhooks to hear maybe a vision from him about how AI will continue to this technology will continue to be monetized. Also, watch out for any comments on European data center build out. There was news yesterday that NVIDIA has teamed up with Deutsche Telekom for a $1 billion data center deal in Germany, where the software giant SAP will be the main customer. So any vision on how perhaps Europe can catch up to the data center race would be pivotal for Europe as well. Now, while data centers and NVIDIA's dominance when it comes to chips used in data centers is looking pretty decent, there are some competitors looking to make headway into that space. One of them was Qualcomm yesterday, announcing a new suite of chips in order to combat NVIDIA's dominance in the AI data center chip build-out. Qualcomm shares rose to a 15-month high on the back of this announcement, up some 11%. Now, Qualcomm historically has been overly reliant on the smartphone chip market. So this is a key for them in trying to diversify into one of the fastest-growing sectors for chips these days.
All right, Valerie Teitel, we thank you so much. And you highlight one of the risk events on the calendar for today, that being Jensen Huang's address. But we also should watch out for, at 2 p.m. London time, U.S. consumer confidence numbers dropping. And then aftermarket, we have ASMI numbers, ASM International. This, of course, the maker of chip-making machines. So those results coming in aftermarket. we shall mind them too. But to get yourself started and ready for the day, do check in on today's edition of Daybreak. Terminal subscribers can find it by going to DAYB Go. But coming up on the programme, we're going to take a closer look at bank earnings. We've already broken the BNP Paribas numbers. We'll dive into what's behind those. HSBC reporting earlier this morning as well. And then later in the programme, we'll turn our attention to tech. Finster AI saying that it wants to redefine the future of financial intelligence. We'll get more from the founder and CEO later in the programme. This is Bloomberg.
The Fed decides.
This Fed is anchored to a massive step down in payrolls.
They are data dependent. We have no data. As far as the employment picture is concerned, I think that they have a pretty good read.
Trust Bloomberg to bring you the fastest coverage and exclusive analysis, including Powell's press conference.
The Fed remains on track to cut rates. You looked at the dot plot, and the dispersion looked like a B-52 bomber's wingspan.
Tune in to Bloomberg Surveillance. The Fed decides, starting at 1:30 p.m. Eastern.
Welcome back to Bloomberg Daybreak Europe. Now, BNP Paribas' trading unit has suffered a hit from souring debt in the third quarter, adding to challenges after a string of recent setbacks. Joining me now for analysis is Tomáš Nerzel, Senior Bank Analyst for Bloomberg Intelligence. Welcome to the programme, Tomáš. Just take us through your key takeaways from this earnings data. I note the trading unit suffering here, but the rest of the numbers seem pretty in line.
Yes, as I said, most of the lines are in line. Little bit lighter on revenue. I think there was around 2% miss, but it's not massive. It's lightish. Cost of risk provisioning in line with consensus. So target confirmed. Possibly no upgrades to consensus. So everything in line. Nothing new to report, to be honest.
OK, and we're going to be hearing from the CFO Lars Machenil later on Bloomberg TV. They've said, BNP Paribas, in a statement alongside these results, that the recent jury verdict in Sudan in the litigation there awarding damages to 3 individual plaintiffs is, and I'm quoting, fundamentally flawed as a matter of fact and law and should be overturned. So this, of course, crucial. What are the next steps here on this claim?
Well, this is the critical definitely for sentiment for BNP. It's going to take time to resolve the issue. It's not going to be 1 month or 2 months. It's several months, possibly quarters before we get it solved. Our litigation analyst predicts, that the fine can be of as several $1 billion. So there's definitely lots of uncertainties around that. BNP view is, of course, that it is flawed. So definitely we're going to hear appeal, and we need to wait for the final solution, which can end up to be a settlement. But as I mentioned, it can take several months before we understand what exactly is happening in the case.
And we also had HSBC earnings at about 4 a.m. London time. They have revenue beating estimates despite the $1.1 trillion provision for litigation to cover, and I feel like I'm going back in times past, the money lost by investors in the Madoff cases. Yes. I'm looking at the shares in Hong Kong up 3.4%. It seems like the turnaround's going quite well here despite that provision. Exactly,
yeah. So if you look at revenue beat of almost 5%, 900 more than consensus expected. Pre-tax profit beat 5%, cost in line, cost of risk in line, CET1 ratio in line despite the 1.1 billion Madoff case provision. So underlying profitability is very strong. The bank has upgraded ROTE view for 2025. Higher NII for 2025, so definitely we are heading into 2026 on a very solid base. Madoff case, 1.1 billion. It seems like clearing the deck. It should cover the case. It should close the issue. So it seems like HSBC is getting all the bad news out of the way, and they are carrying on with the restructuring and the revamping of their business, streamlining operations by Georges. OK, good news so far. Thank you so much for your analysis. Tomáš Nerzel, Senior Bank Analyst for Bloomberg Intelligence. Great to see you. Well, staying with banking, Tom Hayes, the former UBS trader, of course, who became the face of the LIBOR rigging scandal, is suing his former employer, accusing it of handing him over to prosecutors on, quote, a silver platter. He's claiming at least $400 million for malicious prosecution against the Swiss lender in a court in Connecticut. His lawyers say that it was widely accepted throughout the bank that traders should attempt to influence LIBOR to make money for their employer. A spokesperson for UBS declined to comment. And another
Top story from the UK. Food bills have dropped at their sharpest rate in almost 5 years, dragged down partly by the global easing in sugar prices. The British Retail Consortium said that food prices fell 0.4% month on month in October. The BRC called the drop partly a result of lower chocolate and confectionery prices, a treat for those preparing for Halloween parties. Good news ahead of Friday. Well, coming up, the CEO of Brookfield Private Equity tells Bloomberg that deal-making has picked up dramatically. We'll bring you some of that interview next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. It's just gone 6:24 a.m. here in London, and we go to Saudi Arabia next, where the chief executive of Brookfield Private Equity says that deal-making has picked up dramatically. Anuj Ranjan spoke to Bloomberg's Jomana at the Future Investment Initiative in Riyadh.
It's changing all over the world. That era of passive investing and passive capital is over. And the future belongs to those who roll up their sleeves and are really going to build value in the businesses they own. And that's no different here in the Middle East. I think decades of easy money made investors forget what real investing is. And now they have to create, build, and operate businesses better. In the Middle East, it's exactly the same. You have to be able to bring some experience or some value creation to investments.
So where are companies and founders rolling up their sleeves then? Where are those opportunities here in the region?
It's all across geographically. It's all across the Gulf, and I'd say the broader Middle East.
In specific sectors? In
specific sectors, I would say that for us, we have found to be quite exciting is financial services, education, and industrials. Broader business services. The thing is that the great thing about this market is it provides an opportunity to earn emerging markets returns with developed market risk. And so you have this unique opportunity to invest in almost a broad array of sectors where they just haven't had private capital in the past in the same way that they do today.
In the kingdom, there's sort of been I would say like a maturity of the Saudi 2030 vision and a shift towards some of the forward-looking sectors, AI, technology. When you see it this year at FII, some of the conversations are around that, about smart manufacturing, and perhaps less so on some of those mega construction projects. How do you see that opening up opportunities?
Well, we really welcome it. AI infrastructure, we think globally, is an amazing opportunity. And people are thinking about AI, the technology, but they're often not thinking about the supply chain resilience that's required, the opportunities to power AI, the opportunity to build the compute that's required for it, or the opportunity to use AI to make manufacturing businesses or old world analog businesses far more productive. And that opportunity, we think there's $7 trillion of investment opportunity globally. A big chunk of that will be here in the Middle East, because I think what's great about this market is the governments are quite forward-looking and quite partnership-oriented when it comes to AI in particular.
So that was the Brookfield Private Equity Chief Executive speaking exclusively to Bloomberg at the Future Investment Initiative in Riyadh. And Jomana will be bringing us plenty more top interviews throughout the day. Now, to some other top corporate news this morning. Sources telling Bloomberg that Amazon is planning to cut corporate jobs in departments including logistics, payments, video games and cloud computing. Reuters earlier reported that the terminations could start as soon as today and may affect as many as 30,000 jobs. Cuts on that scale would be the largest since rolling reductions that started in late 2022. And Jamaican officials are urging residents to brace for Hurricane Melissa as it tracks toward the island at Category 5 strength. The powerful storm is packing intense rains and winds, threatening to cause widespread destruction on the island. Authorities are also warning of catastrophic flooding, with the storm expected to dump up to 1 metre of rain across parts of Jamaica. Well, coming up on the programme, anything you want. Donald Trump pledges a stronger relationship with Japan as he praises Prime Minister Sanai Takaichi. We'll go back live to Tokyo next. This is Bloomberg. Good morning from London. This is Bloomberg Daybreak Europe. I'm Lizzie Burden, and these are your top stories. An ally at the strongest level. President Trump praises Japan's new prime minister and her plans to increase defense spending. We'll go live in Tokyo. And the record-breaking rally takes a breather as stocks slide in Asia. Copper flirts with new highs on cooling trade tensions between Washington and Beijing. Plus, France's biggest bank takes a hit from loan loss provisions, adding to challenges at BNP Paribas after a string of recent setbacks. Well, checking in on these markets, it's just gone 6:30 a.m. in London. Welcome to the programme if you are just joining us. Of course, we ended yesterday with stocks at all-time highs on the hopes of a US-China trade deal, but we're starting today with futures in a pretty narrow range this morning on both sides of the Atlantic. Traders really holding their breath for more detail on what comes out of Thursday's meeting between Presidents Trump and Xi, and also awaiting two massive days of earnings for the S&P. But already we're seeing stocks a touch lower, 0.5% lower, in fact, in the Asian session. Now, if we go to the cross-asset picture, really interesting moves in the commodities space over the past 24 hours. We've seen gold plunging beneath the $4,000 an ounce level as that trade progress sapped haven demand. We're still below that level now, and we do have to wonder whether this could be a moment for a little bit of central bank dip buying. But on the flip side, we've seen copper, a bellwether for global growth, of course, flirting with a record high, again on the cooling trade tensions, but just shy of that level now. Oil steady but pointing lower. Brent at $65 a barrel now, on track for a third monthly drop. Traders back to focusing on the supply glut, and the 10-year US Treasury yield back below that 4% level as we wait to see how dovish the Fed is tomorrow. Now, we can turn back to the earnings story as we do have breaking earnings from Danone out of France, of course. Third quarter sales coming in pretty much bang in line with estimates, really. 6.8 billion euros. The estimate had been for 6.87 billion euros. So an ever so slight beat there. They still see full year like-for-like sales in a range of 3% to 5% growth, and they have said that sales have climbed particularly on strength in Asia and demand for high protein products as well. So sales in line for Danone here. Now, let's get back to the geopolitics, where President Trump's Asia tour, he's currently in Japan. He's been meeting with the Prime Minister Sanai Takaichi, but meanwhile, during the talks with his Japanese counterpart, we've had the US Treasury Secretary Scott Bessent really refraining from weighing deeply into the Bank of Japan's monetary policy. So let's get some analysis now. We're joined by our Chief North Asia correspondent, Stephen Engel, out of Tokyo. Morning again, Stephen. It does seem like both sides have sought to strengthen their ties on this trip, but there's a lot that's been left unsaid, particularly on trade and also on the BOJ.
Yeah, I think it was very clear the marching orders, whether it came from Donald Trump or others, was we need to show a unified front to the Japanese and the new prime minister who's only a week into the job. And as, of course, the backdrop of all this is these negotiations that are going on with the Chinese that happened just before this trip and will continue after this trip. So I think there was a concerted effort to show a unified front that Japan and the United States are rock solid allies. You can call me anytime, he told Takaichi-san, and ask anything you want. They are allies, at the strongest level, essentially. Now, you just mentioned Scott Bessent. He has been critical over the last couple of months, saying that the Bank of Japan has been behind the curve on inflation, and we all know that the yen has been weaker, upwards of 153. So that is a trade friction hot button issue for the White House, but they did refrain from really bringing that up. And keep in mind, the Bank of Japan meets for its next rate decision on this Thursday, the same day Trump is meeting Xi Jinping. They're likely to, keep the policy rate unchanged. But again, there's growing chorus that there needs to be a more aggressive tightening, perhaps by January, to counter inflationary pressures. But keep in mind, Takaichi-san is more in favor of easing monetary policy. So I think Japanese policymakers are relieved that Scott Bessent didn't make this a big contentious issue. Today was all about the positives in Japanese-U.S. relations. Those other, I wouldn't say minor, those other issues will be brought up again at a later date.
OK, Bloomberg's Chief North Asia correspondent Stephen Engel, great to see you. We thank you for that context. And we're going to be waiting for more remarks from President Trump. He's going to soon be delivering comments aboard the USS George Washington during that trip to the Yokosuka Naval Base in Japan. So just waiting for that any moment now. But turning back to the Middle East now, where the world's biggest bankers are gathered at the Future Investment Initiative, FII, over in Riyadh. Our Horizons anchor, Jemana Basetchi, has been speaking to the Goldman Sachs CEO, David Solomon, about his outlook on both the Fed and the credit market too.
The Fed, will cut rates tomorrow, and then we'll see. I know the consensus is you'll get another cut before the end of the year, but the policy rate has been higher. I think they're looking to move more toward neutral, and so we'll take a step in that direction. But I think the Fed always is an observer of what's going on in the real-time economy. The real-time economy can shift very quickly. At the moment, I would say the U.S. economy is in quite good shape, but I wouldn't jump forward. There are lots of forward prognostications about the path of interest rates. I would just highlight mostly, I'd look at the moment. You can project forward, but just because there's a forward projection, it doesn't mean that's why where we'll wind up.
There's still a lot of uncertainty out there.
There's a lot of uncertainty. I think this is a great opportunity for people that are in credit businesses and are deploying significant capital as lenders in credit businesses to look at their procedures, their practices, their underwriting standards, look through their portfolio, and really take a strong evaluation of where they are.
Yeah.
You can't separate the fact that we've been in a very, very long, easy credit cycle, one of the longest I've seen in my career, without a real credit pullback, without an economic environment that's really put an enormous amount of pressure on credit. And in that context, credit spreads are historically tight.
Yeah.
And I know at some point there will be a credit cycle. It will probably come at a period of time when the economy slows more acutely, or there's some sort of a macro event that changes confidence we have in growth and the trajectory of the economy. And when that happens, given the velocity of lending activity, there will be losses in credit, and those losses will be felt across the system. But that's different than a systemic crisis. And I don't see anything in the context of a handful of bad credit situations that's leading me to say that we have a systemic issue around the corner.
Yeah.
Unfortunately, lenders make mistakes. There is fraud in markets. And that's something that as lenders we all have to try to protect against. But we should not be fooled by the fact that this is a very robust credit environment. Credit spreads are tight. And when we do have a cycle, which probably will come when there's an economic slowdown, there will be losses, and we'll feel that across the economy.
Wonder what the BNP Paribas CFO will have to say about that when we hear from him later. Cockroaches in credit. But that was the Goldman Sachs CEO, David Solomon. Jemana was also speaking to the CEO of Standard Chartered, Bill Winters, still at FII. They were discussing US-China relations and the impact of tariffs on that bank. Here's what he had to say.
Of course, it's good for the world, right? If the U.S. and China can de-escalate, it's going to be good for confidence. It's going to be good for growth. Of course, it'll be good for the U.S. It'll be good for China, and these are all good things. Our business really does well in kind of any scenario that's not extreme. Mm-hmm. The extreme scenarios of the U.S. and China spiraling into a really bad place, which looked possible, but I don't think was ever likely. That's a bad scenario. But the good scenarios are ones where the world gets back to business and is focusing on investing, creating jobs, goods, services, trade, cross-border. And it looks like we're a step in that direction.
Yeah. How have tariffs affected the bank?
I'm really not at all so far. So what we've seen is, on the one hand, a number of our clients are looking to basically hedge the outcomes. So there's been much more activity in financial markets. There's been a lot of preemptive funding of future projects or future capital needs, which is good for business. So that business is probably as good as it's been. On the other hand, we know that tariffs defer some investments. So some of our clients who, for example, have been looking at how they would diversify their manufacturing away from China into other markets, including many Chinese companies, in part because of tariffs, but in part because that's the nature of the evolution of business now with other countries having low-cost capabilities that can complement China's. Those investment plans go on hold when there's so much uncertainty. So on balance, it's probably been neutral to our business. But I think clearly in the medium term, a decompression of these tensions is going to be good for our business, is going to be good for the global economy.
I was on a panel with the UAE trade minister a couple of weeks ago, and he made this really nice analogy. He said trade is like water, it will find a way to flow.
That's exactly right.
And I wonder whether, for you, that's also created an opportunity, the rerouting of some of these trade flows.
Oh, it's a huge opportunity for us because Standard Chartered Bank operates globally, but concentration on the ground across Europe, Asia, Middle East, and Africa, and big business in China and Hong Kong, every ASEAN country, every South Asian country, everywhere in the Gulf and the Middle East, North Africa, and Africa. So the investments are led by Chinese companies, and other companies are moving into all of our markets where we have a natural home position. Of course, China is investing heavily as well, and the new economy sector in China is absolutely booming. Yeah. And that's a great business opportunity as well. So, but you're right, the analogy of water flowing through a rock is perfectly correct. And water will come out the back end. And interestingly, when it comes out through the rock, it's cleaner than what it was when it came in.
So that was Bill Winters, the CEO at Standard Chartered, speaking with Bloomberg's Jumana Basechi at the FII in Riyadh. And we'll have plenty more conversations from her at that conference throughout the day. Now, here's what else you need to know this morning. The European Union and China are to hold talks this week to address trade disputes. The Commission will receive a Chinese delegation to discuss rare earth restrictions, which have sounded alarm bells among governments and firms across the bloc. Preliminary talks were held on Monday to prepare for the arrival of a high-level Chinese technical delegation on Thursday. And turning now to France, where the National Assembly adopted an amendment yesterday that would increase taxes on the country's largest companies next year. The government is under pressure to make changes to its draft budget to convince lawmakers not to table no-confidence motions that could topple Prime Minister Sebastián Lecornu and likely trigger parliamentary elections. In Spain, the Prime Minister Pedro Sánchez, meanwhile, has lost a key coalition ally, making passage of a 2026 budget highly unlikely there. The Catalan separatist political party that props up Sanchez's government said that it will withdraw support for his coalition and move into the opposition. Although the party pulled support, it stopped short of calling for a no-confidence vote, meaning the government isn't at risk of collapse. And European car sales rose for a third consecutive month in September. It comes as consumers were able to choose from a growing number of affordable EV models. And according to the European Automobile Manufacturers Association, sales of fully electric vehicles and plug-in hybrids jumped, with deliveries of the latter rising 62% on a year ago. Sales of full EVs increased 22%. Well, those are some of our top stories this morning, but coming up on the programme, we're going to discuss how Finster AI is hoping to redefine the future of financial intelligence. We'll speak to the founder and CEO next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. It's 6:45 a.m. here in London. And our next guest left Google DeepMind to launch an AI startup focused on investment banking and asset management. London-based Finster AI has just raised $15 million as it expands its New York footprint. And I'm pleased to say its founder and CEO, Sid Jayakumar, joins me now on set. Really good to see you, Sid.
Thanks so much, Lucy. Thanks for having me.
So for anyone who doesn't know exactly what Finster does, just walk us through what you offer to investment banks and asset management and what Finster can do that a genius with a Bloomberg and a spreadsheet can't.
Yeah, well, I appreciate the heads up on the spicy question. But look, I think I'll start by saying we're not trying to take on a Bloomberg, or not yet anyway. I think the way I view it is if you look at the past few waves in technology generally, but specifically in this space, most of it has been about sort of access or augmentation. It's going, there's high-quality data somewhere, it's buried in public filings, it's buried in earnings calls. A lot of the first wave that Bloomberg spearheaded of financial intelligence was how do we get that data real-time to people where they need to be. I think of our kind of mission, and the general AI mission is personalization. Okay. So that's saying if I'm an asset manager sitting down at my screen today, I can get all my numbers on Bloomberg and I can get everything that happened, and there's trillions of data points, what are the 6 that I really need to know today in the context of everything that I've said, done, or invested?
But what do you say to the cynics, the skeptics, the likes of Ken Griffin, who say you can't generate alpha using generative AI?
Look, I think that's great. If I could generate alpha today, I would start a hedge fund. I wouldn't start a SaaS company. We're not saying that we will generate alpha for you. And I think that, there are other companies who say that and talk about insight generation. I think that's the wrong message. What we're saying is, if we put our proprietary AI tech and all of the data we have in front of you and you play with it for a few hours or a few days, at the end of that process, that agent will know you and your investment process and your institutional knowledge better than you would know yourself, or as well as you would know yourself in 100th of the time.
Okay.
And so what you've really got is a virtual sparring partner on the other side that's able to look at what you're doing, right? Very simple question. I can get the revenue of Apple and I can get what consensus was from Bloomberg or FactSet or anyone else. But when I get the number, what I really want to know is, what was it that they said that was interesting in light of the thesis that I have? If I have a position and I wrote this research report a month ago internally, yes, the headline number is good, but is it good for the reasons I thought it was good, or was it good for completely different reasons and my kind of thesis was wrong?
But do you still need humans, or is this AI coming for people's jobs?
I think there's a lot of talk about replacement and saying you don't need humans. I think that's short-sighted. Fundamentally, especially AI today, works only as well as the data that's put in. It's still a traditional kind of garbage in, garbage out problem. And what we're building our expertise on is very much the institutional knowledge and data that those firms have accumulated over the last 30 years. And we're saying to them, you haven't used that to its full potential. There are great nuggets in there about what differentiates you as a firm and what your investment process is that we can try and replicate. If we get rid of humans, you lose that DNA of that firm. So that's not what we're trying to do.
Okay.
I think this will very much remain a human-in-the-loop process. It's how do you personalize what they're seeing on their screen every morning to the 4 things they need to know to make a trade in 5 minutes.
Okay, just maybe fewer humans, perhaps. But I was also interested, in your bio, there was a little postscript at the end. It says, Sid believes AI companies should not be capital intensive. And that really speaks to the debate that we've been having day after day on whether AI is a bubble, whether all of this CapEx is going to be justified when it comes to revenue. Do you think it's a bubble? I
didn't know that was in the bio, but I do believe that. Look, I don't think it's a bubble if we're talking about, is there a paradigm-shifting fundamental piece of technology here, right? I've kind of bet my career on it, and that's what I did at DeepMind, and that's what we're doing at Finster, so that's my kind of standard answer. But I think every one of these waves has had elements of bubbles, right? I mean, you look at the number of foundation model companies and what they've raised, either you have to conclude that 80% of the world's GDP will be automated by AI, and that's where value goes, and that's, there's very intelligent people who will take that bet, or you have to assume that some of those aren't going to make it. And I think that is just the nature of VC returns and the way they back it. I think the way I think about it on capital is, if what we're selling our customers is you can be more efficient with AI, you can be more personalized with AI, you can get things done faster, then we need to be doing that inwardly as well, which means you don't need an army of engineers if AI can write some of the code for you that's being built to sell to other people. I think that's the context in which I think we have to very much sort of talk the talk and then walk the walk on being AI native ourselves.
Well, speaking of walking the walk, Sid, you've just raised this $15 million. Just talk us through what the next stage of scale looks like. I know that you're expanding in New York, but you're headquartered in London. Are you thinking potentially about eventually listing stateside rather than here?
I did see your interview with Dame Julia, so that's a good question. Look, I think New York...
She'd love to have you here.
New York expansion has been a big part of it for us. Obviously, we're still early and kind of IPO talks are far away, but we've hired some senior folks from Morgan Stanley and others to lead that up. I think a key part of the focus has been, I'm very much the AI voice, but bankers don't want to be sold to by AI people all day long, and having a good mix of AI and finance backgrounds in the team is a big thing. We're very focused. Despite the kind of London, New York presence, we're very focused as well on emerging markets and APAC. And one of the reasons for that is, getting back to the access to data problem, a lot of those haven't been solved as yet there. And there's a lot of capital inflows coming in. And there are a lot of people going, if I could have more information or intelligence about how to think about companies here, AI is a very good tool to kind of deal with some of the obvious problems along the way of things hidden in investor relations websites and translation and things like that. Too early on IPO, so I won't answer that question just as yet. I think, look, I'm really bullish about the UK. I think, we use the DeepMind word a lot when it comes to AI in the UK, but I do think it's created an ecosystem of, hundreds of companies that are taking on kind of big UK tech giants here. So I think there's a problem at the kind of LSEG capital markets level, but we're good on the startups phase.
All right, Sid, always a pleasure to see you. Sid Jayakumar, founder and CEO of Finster AI. Hope to have you back soon. We thank you so much. Now, turning back to Japan, because the President, Donald Trump, has just arrived at the Yokosuka Naval Base in Japan. He's set to deliver remarks to service members aboard the U.S. George Washington aircraft carrier. You can see him there alongside Sanai Takaichi, the new Prime Minister of Japan. Already strong words for her about the strength of their allegiance. And as we've said, leaving out certain thornier issues like the Bank of Japan, but really impressed by her hawkish foreign policy, it would seem, so far. And so that visit continuing as we head towards the Trump-Xi meeting happening on Thursday. But we've got plenty more coming up on the programme, so don't go anywhere. This is Bloomberg.
I think the tension between the United States on trade issues is going to continue past this meeting. That's not a criticism of President Trump. It's actually more a criticism of the Chinese government and of the fact that they've been extraordinarily difficult on these issues. Overall, I'd say that, this is a very competitive U.S.-China relationship.
So that was the former U.S. ambassador to China, Nicholas Burns, speaking there on the continued tensions between the U.S. and China as we head towards that Trump-Xi meeting on Thursday. But that trade optimism has meant that the S&P and the Nikkei have broken past two key levels, respectively. 6,800 for the S&P and 50,000 for the Nikkei 225 over in Tokyo. And that means for the rest of the fourth quarter, we could see a resetting of the technical picture. Now, let's flip the board over, because there's also a key level that has been broken when it comes to gold, but that is in a southwards direction. Of course, we've seen this rally for weeks and weeks going up and up for gold, but now we are back below that $4,000 an ounce level as the demand for safe havens is sapped. As I say, is this a moment where we see a bit of central bank dip buying? We keep an eye on the yellow metal. But Bloomberg Terminal users can find all of these charts and others used throughout the show by going to GTV Go on your Bloomberg Terminal. The 9th edition of the Future Investment Initiative taking place in Riyadh as we speak. Do stay with us for more conversations from that. But the opening trade is coming up next. They'll take you all the way to the European Cash Open. Stay with us. This is Bloomberg.